Coming up on Your Money and Your Life, what's better to invest in? Residential property, commercial or industrial? The hidden cost catching EV drivers by surprise. How to automate your investing and get on with life. Plus, in Kochie's Budget Challenge, Clement shares how he's saved on his home loan. G'day and welcome to Your Money and Your Life, the show that's all about helping you keep more money in your pocket. Today we're kicking off with Kochie's Budget Challenge. Every week, with the help of the team at Compare the Market, we dive into real people's biggest bills to see if they could be on better deals. Let's meet Clement.
It was exactly a year ago that I built this brand new house. It was a knockdown rebuild project. It's a 4-bedroom, double-story house, close proximity to the water, an absolute dream come true. Hi, I'm Clement. I work as a commercial manager. I'm based in Brisbane, the Sunshine State. When it comes to comparing and reviewing bills, I kind of take a backseat, to be honest. I'm looking forward to Kochie's Budget Challenge to see what sort of a magic wand he's going to wave to find those special deals for me.
Clement, thank you for having us in this brand new home in Deception Bay. Wow, sunny Queensland. Are you loving it here?
Absolutely. I live so close to the river. Overall, I'm very happy with my move.
And you're a bit of an engineer, so attention to detail.
When it comes to my own finances, I'm a bit complacent. I hardly compare the market as such.
Right.
And I think that's where I need to look at.
Well, let me tell you, the fact you're aware of doing that, that's the first step. So with the team at Compare the Market, we have looked through some of your biggest bills. Now, all of this is just to give you thought starters guidance. You've got to go through the process yourself because everyone's very different. But I got to tell you, Clement, you're doing okay, and you've made some good decisions along the way. Your mortgage broker, Steve, had his crystal ball out as well on interest rates and said if you don't lock in your fixed rate now, rates could probably go up. That involved a rate lock, fee of around $600. Were you happy at the time to do that?
So that was the decision that I made at the 11th hour, 59th minute, 59 seconds. To lock in, pay that $600, and it was worth every cent.
Savings $5,000 over the 2-year fixed term, and that's so far.
Absolutely. It was worth it. I'm very much into boating and fishing. The great thing about this location is the proximity to Brisbane CBD, to the airport. It's a great location.
Let's take a look at your home and contents insurance. One of the amazing things about your place here is the access to the water. Stunning, but also creates a few issues with insurance, doesn't it?
That's right.
Were you aware of that when you went hunting for home and contents insurance?
What I was quite surprised was that because of the proximity to the water, there were not many insurers who were willing to insure my property. And I found that quite bizarre.
Because in locations like this, there's flood insurance, which everyone knows about.
Yeah.
But there's storm surge insurance as well, isn't there? And flood is defined as water that's been escaped or been released by a body of water like a river, creek or dam. Storm surges are an abnormal rise in sea level caused by a storm system. You being here at Deception Bay, you're really vulnerable to that, aren't you?
Absolutely. It can happen.
And most insurance policies cover flood. Not many cover storm surges, even as an optional extra. So you have got it clearly defined in your home and contents coverage, and you're probably limited to staying with that insurer because they're one of the few that offer storm surge. So,
absolutely.
So a really appropriate insurance coverage for you. And the fact that you've clearly defined it in your policy is really a step in the right direction. Well, Clement, you made the absolutely last-second decision in terms of fixing your mortgage. $5,000 saving over the 2-year fixed period. Absolutely the right cover for your home and contents insurance. You were beating yourself up earlier saying you don't pay enough attention. You paid plenty of attention.
Oh, thank you.
It's been really good. But the challenge is, let's see if we can find even more savings.
Great. Looking forward to it, Koshi.
After the break, is investing in commercial and other types of property the right fit for you? Welcome back to Your Money and Your Life. Well, when Australians think about property investing, most of us picture buying a house or apartment. But with recent tax changes flagged in the budget, experts say commercial property is becoming increasingly attractive. And it's not just offices and shop fronts drawing attention. Investors are also looking at industrial warehouses and even vacant land. So which type of property delivers the best returns? What are the risks? Nerida Conisbee is Ray White's chief economist as she joins us now. Nerida, why do you think investors are now broadening away from residential?
A lot of it has to do with the budget. So there were significant changes with regards particularly to negative gearing. It now has been banned on existing properties. Also some changes to capital gains tax. With commercial property, the capital gains tax rules remain, but you also can negatively gear. So I think as a result, people are looking a little beyond residential, and commercial property is one of those options.
So you've put together a little checklist for us, thank you for doing this, on what to consider before investing in commercial.
Yeah, look, there's a lot to consider. I think one of the first things is how complicated it is. It's much more complicated than residential property. So when you have a look at the lease terms, can be quite difficult. The tenants can be a lot different from a residential tenant. Also the price point. So the price points are a lot higher. It is quite difficult to find a commercial property under $1 million compared to, say, residential, where it is much more readily available. Financing as well. So the financing can be much more complicated. You do need to research very heavily before you consider it.
Yeah, so it's attractive because it can be negatively geared, but it is higher risk and it's all yield-based, isn't it? Rather than just capital growth.
Yeah, absolutely. So people, when they buy commercial property, they do tend to concentrate on yield. So as a result, if you do buy one, you may not get the capital growth that people tend to buy residential property for. You are relying on a yield, and the yield does need to be quite high to make it worthwhile. So if you have a look at the cost of finance, particularly now after 3 interest rate hikes, you do need to consider that the yield does need to be higher than what you're paying on the mortgage.
Do they run on a similar investment cycle to residential?
Definitely not. So industrial...
So that could be a good or a bad thing?
Well, it can be a good thing. I think, though, what has happened is that in the past, office was always seen as a very safe bet, but we saw a radical change in that when the pandemic hit and people started to work differently. Industrial has been one of the top performers, but at the moment, tenant demand is a bit weaker because small business growth is a lot weaker. Retail was bad because of online shopping, but now, because it has adjusted so much, is looking like a better buy. So there's a lot of structural changes you need to consider, which for residential is, basically population growth and housing supply are the two, fundamental drivers of it, and also interest rates.
So where do you think the best potential is over, say, a 5 or 10 year time frame?
Yeah, look, it probably is industrial. We know that industrial is being used for more things. So if you have a look at the amount of online shopping people are doing, we need more warehousing in outer suburbs. So you also need more last mile. So you need more localised industrial facilities. Also, when you have a look at the impact of population growth, you do need more things built, stored, all of those things which really favour industrial property.
Okay.
You really have to get good advice. I think with commercial, it's not as simple as buying residential. I think, we all live in a home, but with commercial, very few people have exposure to an industrial property. You may work in an office, but you may not understand the metrics behind investing in them.
Nerida, thanks for explaining it to us. Really appreciate it.
Thank you.
Time to bust a huge myth about super and what it's actually designed to do. The myth: super is just a lump sum you get when you retire. The answer? Not anymore. Today's super is designed to support a steady income through life after work. But research from Brighter Super has found that fewer than 30% of retirees clearly understand their income options. Yet among those who do use retirement income products, 76% report high satisfaction. Why? Because super can provide a regular income in retirement that's often tax-free, while your savings stay invested and continue working for you in the background. And that matters because more than half of Aussies expect they may need the age pension if their savings run out. But on its own, it may not support the lifestyle most people want. Retirement income products can help make savings last longer, offering tax advantages and building stability. Here's what to consider. First, talk to your super fund about retirement income options. Second, explore products that provide regular payments while your balance stays invested. And finally, consider how super, savings and the age pension can all work together. Because super isn't just about saving, it's about creating income to support you through retirement. Still to come, how one simple auto transfer could help build your wealth for life. Welcome back to Your Money and Your Life. Investing in shares can feel complicated, even daunting. There's this idea you need endless research, thousands of dollars and constant attention. But new data from Vanguard shows younger Aussies are embracing investing more than ever, with many turning to simple apps to do the job. One of the biggest shifts in investing is automation, setting up trades to happen in the background while you get on with your life. So how can you put your investing on autopilot and build wealth in the background? Our Equity Mates guides, the co-founders Ren and Bryce, join us now. Fellas, good to see you again. Bryce, technology has changed the way Aussies invest, hasn't it?
Absolutely. I mean, we've seen an explosion of the apps you spoke about in the intro there. Online investment apps have just taken off here in Australia. I think there's about 40 now that are available for Aussies to invest. If you think about a decade ago or 2 decades ago, I think about 20% of trades went through an online app. Now it's over 70%.
Wow.
So we are getting access to markets that traditionally were hard to get access to. We can invest in the US, we can invest in Europe. Brokerage has been absolutely smashed by these online apps. We can now invest, with $0 brokerage. So technology has really opened up the world of investing to many more Australians, not only through the platforms, but also through product innovation as well, like exchange-traded funds have really allowed many Australians to get access to markets in an easy, efficient way. So it's incredible.
Ren, I love your philosophy in your book titled Don't Stress, Just Invest. I like it. What does automated investing actually look like, though, for someone?
Well, first of all, I appreciate the plug. Automated investing is so important because there's so many ways that our brain convinces us it's not the right time to invest. We worry that the market's too high, it might be overvalued. We worry that the market is low, it might be falling. And we can always find a reason to not put our hard-earned money to work. But what the studies show and what the experts tell us over and over again, that consistently investing is the right way to invest. It's how we invest our superannuation. Every time we get paid, money is consistently invested. And that's the philosophy we should have in our personal investing as well. So automation is just taking the decision out of it and setting it up so that in the background, your money is automatically transferred from your bank account to your investment app, and then that money is automatically invested for you.
So, Bryce, do you think about where that money is going to be invested, though?
I mean, absolutely. It's, we don't want to just be throwing darts at a dartboard and automating into something that is complete rubbish. So you still do need an investment strategy behind it, but something that we talk a lot about is investing in exchange-traded funds. And these are products that wrap up, hundreds or thousands of stocks, both here in Australia or globally, and allow you to invest in one simple trade in a diversified portfolio at very low cost. And when you combine that with automation and just having it ticking away in the background, it's a really incredible way and powerful way to build wealth over the long term.
But Ren, everyone fixates with the timing. Is it the bottom of the market? Is it the top of the market? Should I buy and sell? By sitting back and doing nothing, it sounds almost counterintuitive. Does the stats back you up?
The stats back it up. So
Right.
there's a number of studies that show just how powerful buying the overall market can be. Now, there's a study from Market Index, which looks at the Australian share market back to 1900. And it looks if you reinvested your dividends over that 125-year period, you would have earned 13% a year in your money. Not buying or selling at particular times, not trying to pick the right stock, just buying a little bit of everything.
Just being invested.
Just being invested. And there's study after study. There's this big study that was done by the Federal Reserve of San Francisco. They looked back to 1870 to 2015. After inflation, the Australian share market delivered 7.8% a year after inflation. So there's study after study that shows over the long term, and I'm talking really long term with these studies, if you're just consistently putting your money to work, the market will do the work for you. But here's the thing, people always then say, yeah, but maybe I can time the market. Maybe if I don't buy when it's high and I wait, then I'll get a better return. And so we actually did this study. We titled it, Even God Can't Beat Dollar Cost Averaging. And what we did was we looked at the last 25 years of the Australian stock market. And we had two scenarios. One scenario was you just invested every Monday. You got $100 and you just put it in the ASX 200 every Monday when you got that money. Our God in this case, who had perfect foresight and perfect market timing, waited until the very bottom of the market, waited until the market had crashed and they could buy at the cheapest possible moment. Over 25 years, our dollar cost averager beat God. And the reason was because God is holding all of his money, waiting for the perfect time to buy. That time that money isn't invested, it's not growing, it's not paying you dividends, you're missing out.
I love it.
Yeah.
And your superannuation analogy is a really good one because that's what we do with super the whole time. 12% of income goes in, we don't even think about it.
Exactly.
Guys, it is always great to catch up. Thanks for joining us. Really appreciate it.
Thanks for having us.
Coming up next, save on fuel but pay more for insurance. We uncover the true cost of EVs. More than half of Australians say they're considering switching to an EV or hybrid. It's better for the environment and in many cases, your hip pocket too. But there's an expense catching drivers by surprise: insurance. Latest research from Compare the Market shows the average cost to insure a fully electric vehicle had jumped more than 10% in the past year. Here's motoring expert James Ward.
The batteries are costly. The parts sometimes harder to get a hand of, and they do need specialist repairers.
Separate research shows that EVs are generally more expensive to insure than petrol vehicles. But despite the added costs, Aussies are embracing electric cars faster than ever.
If you compare April this year to last, electric vehicle sales have more than doubled, which is a pretty extraordinary uptake.
In fact, industry data shows sales of new EVs for the first time ever have surpassed traditional petrol vehicles in Australia. So how can drivers help keep insurance costs down, limit younger listed drivers, increase excess if appropriate, check for low kilometre discounts and compare a range of policies before renewing?
If your current car isn't electrified, tell you what, your next one will be.
As more Aussies switch to EVs, increased competition could eventually bring premiums down. But for now, one of the easiest ways to save is to shop around for a better deal. With interest rates continuing to rise, more Australians are thinking about refinancing. So how do you make sure you're getting the best deal in the market, not just a different one? Here are some tips. Number one, don't just accept the rate in your renewal letter. Pick up the phone and ask your lender for a better deal. If they can't offer a competitive rate, shop around. Number two, focus on the real savings. A lower interest rate looks great on paper, but what really matters is whether you're doing better off month to month. Check the comparison rate, which combines your interest rate with the additional costs of your loan, and see if an offset account is right for you. Number three, keep it simple. Nowadays, there are streamlined options that can fast-track the process. Some lenders, like Wealth, call this an easy refinance. If your new rate and repayments are lower, this can be a quick and easy option for borrowers to reduce the typical hassle of a refinance with less documents required. Wealth can provide funding to pay out an existing home loan even before notifying your current lender. This way, you can avoid discharge processes and fees. So do your research and shop around. Hey, good luck. Well, that's all we've got time for today. For the latest money and investment news, go to ymyl.com.au, and while you're there, subscribe to my exclusive newsletter, which is emailed to your inbox every Friday. It's free and full of practical advice from me. Thanks for your company. Next week on Your Money and Your Life, the Australian tech stock's set to explode over the long term. How you can save more than $3,000 on your grocery bill. Hidden opportunities for borrowers to help you get on the property ladder. Plus, part 2 of Koshy's Budget Challenge with Clement. How else can we help him save?